Okay, so hello everyone, and welcome to this day 5 of ACCA AFM P4 Advanced Financial Management webinar conducted by ACCA. Now, today is our last session of this webinar series, and today we will be discussing our topic of mergers and acquisitions. Okay. Now, as you all know, that mergers and acquisitions is considered a topic where the examiner reports frequently mention dissatisfaction from students' performance. Okay, means if you refer to examiner reports, the examiner is usually not satisfied with student performance in mergers and acquisitions. And I have been teaching this paper for the last 7 years. Whenever I meet students after giving the exam, after clearing the exam, those students who secure nationwide place winners or those students who are unable to clear, everyone is also not comfortable with mergers and acquisitions. Okay, now there are sound reasons that why examiner is also dissatisfied with the performance in mergers and acquisitions, as well as why students are uncomfortable. Okay, this particular topic is a bit different from traditional style. That is your other topics. Now, traditionally, what topics you like? Being students, what topics you like? Now, basically, a student mindset likes such questions which are mainly format based. Student mindset likes those questions which are basically format based questions. What is meant by format based questions? You like those questions, those topics which follow a sequence, a proper format. Every question has the same format. Like, why is the case that students like investment appraisal? Because investment appraisal, every question has the same format. You know that even if the question is difficult, still you will be able to score marks by noting down the revenue, the cost, the taxable profits, the tax, the depreciation, the working capital, etc., etc. Okay, because it is in line with your traditional thought, what you like. Okay, similarly, why people like weighted average cost of capital? Because again, every question of WACC has the same format. Then you need to find KE, then KD, then cost of bank loan, then cost of preferred shares. It's traditional. Okay. Now, why do students are comfortable in BSOP questions as well? Because every question of BSOP has the 5 steps. Find PAPE, RST, then E minus RT, then D1, D2, then ND1, ND2, and then the call and put option value. Okay. Now, why do students like currency risk management or currency futures or currency options? They have a standardized pattern. Interest rate risk management is a bit tricky, but because you just did one question with me, if you had done 4 to 5 questions, you would have found it a piece of cake. Usually, my students really like interest rate risk management as well. So, because interest rate futures and interest rate options as well, if you are following my format, standardized. Now, mergers and acquisitions is basically different from your traditional thinking. It is not a standardized topic that any tutor can just make a random format for you like investment appraisal and every question will be solved through that format. If you look at mergers and acquisitions question, every question has some different strategy. This is what is different with your traditional style, and that's why students basically don't like this topic too much. However, it's a big sea, it's a big ocean, in fact, with so many small things. What I'm going to cover in mergers and acquisitions today is basically my thinking of what I expect, or my sixth sense says that is going to come in this particular attempt. That's why I will be highlighting that topic. Okay, so let's start. Now, in mergers and acquisitions, we all know that the basic storyline is of takeovers. In mergers and acquisitions, the basic storyline is of takeovers. Okay, that there is one company which is willing to acquire some other company. Okay, in mergers and acquisitions, the question is always the case that there is one company which is willing to acquire another company. That means one company is buyer, one company is seller. Okay, now whenever a buying company acquires some company, remember one thing: whenever a company who is the buyer, it wants to acquire some company, before acquisition, it always finds its value. It always finds its value. Okay, because if I am interested in a company, I am company A and I want to acquire company B. If I'm interested in that company, how much consideration to pay? Obviously, I will not pay more than what it is value. So what is the value of the company? That's what mergers and acquisitions is all about. You are willing to buy a company, find its value. The value is found before acquisition, called pre-acquisition value. And the value is also found after acquisition, when the both companies are combined, becomes a larger company, that is called post-acquisition, right? Whenever we talk about mergers and acquisitions, that's basically a takeover story. One company is acquiring or taking over another company. Okay, let's suppose one company is willing to acquire another company. When I'm willing to acquire a company, I need to pay something. I won't pay more than what is its value. They won't accept less than what is its value. So we need to find value of the company. The value is computed before acquiring the company, called pre-acquisition value. And when both companies combined, we also compute post-acquisition value. Okay. Now, how to find value? Now, to find the value of the company, there are different valuation methods. To find the value of company, there are different valuation methods. Okay. The commonly used methods are net assets valuation method, which basically believes that the value of company is based on its assets. Okay. Similarly, there is a method called dividend valuation method, which states that the value of company is based on dividends. Similarly, there is a method called PE ratio method. This method states that the value of company should be based on the earnings of the company. Okay, the price earning ratio, PE ratio. This method states value of company should be based on the earnings of the company. Then there is a method called free cash flow method. This method believes that the value of company should be based on the cash flows of the business. Now, all these methods are used in real world. As far as you are concerned, exam, you have to follow the method which examiner asks. Okay. However, when you are buying a company, always remember, when you are buying a company, you will want to find its value in order to get an idea how much to pay. Okay. You basically want to find the value of the company. The value of that company is computed before acquisition, that is called pre-acquisition value, and after acquisition, that is called post-acquisition. Okay. Now, if you are interested in finding value of the company before acquisition, after acquisition, there are different methods. The net assets valuation method, which states value of company should be based on assets. It possesses means if the company has more assets, it should have more value. If the company has less assets, it should have less value. Okay. Dividend valuation method, which states value of company is based on dividends paid by the company. Okay. If the company is paying more dividend, it has a higher value. If the company is paying less dividend, it has a lower value. Price earning ratio method, which says value of the company should be based on earnings. Earnings is PAT, profit after tax. The company has more PAT, more value, less PAT, less value. Free cash flow method, which states value of the business should be based on the cash flows it has. If the business has more cash, then value should be higher, less cash, value should be lower. Okay. Now remember, through whatever method you compute the value, whatever method you use, let's suppose you find the value of 5,000. Through whatever method you compute the value, let's suppose you found the value as 5,000. Okay. That means you need to pay $5,000 to get this company. That means you need to pay $5,000 to take over or acquire this company. Okay. Now, when you are acquiring the company, basically you are acquiring its shares. When I teach this topic in my face-to-face classes, and I say, okay, we are acquiring a company. So what exactly we are acquiring? So people answer, sir, we are acquiring assets of the company. Sir, we are acquiring building of the company. We are acquiring machines of the company. No, you don't acquire anything. When you are acquiring company, you are basically acquiring its shares. You are taking the shares of the company, because once you get the shares, all assets and liabilities are automatically transferred to you. Okay, remember, assets is equals to liabilities plus capital, equity. So if you find equity, it's assets minus liabilities, right? So when you acquire equity, shares of the company, all assets and liabilities automatically come under your responsibility. Okay, so remember, when you find the value of the company and value is 5,000, that means you are willing to pay 5,000 to get this company. But against what you are paying 5,000? Against what? You are paying 5,000 against shares. You are taking shares of the company, because once you take shares of the company, everything of that company is yours. Okay, let me take a look at the questions. Okay, Meena, so as I told you, I would be covering the most important things. This CIV, computed intangible value method, has never been tested in the exams, because this method is only used where the company is based on intangibles. And if you look at the past papers, the companies you get usually are based on tangible assets. So this method won't work. So obviously we have to cover those methods which are frequently tested rather than the methods which are never tested. Okay. So when you're acquiring a company, basically you are not acquiring its assets or liabilities. If you're acquiring shares, everything, once you get the shares, everything is yours. And when you are acquiring a company, That is, you are acquiring shares of a company. When you're acquiring a company, that is, you are acquiring shares of a company, you have to pay something against it, right? When you're acquiring a company, that is, you're acquiring shares of the company, you're taking shares of a company. No one is going to give you shares for free. Obviously, you have to pay something against it. So usually, there are different considerations. Sometimes you acquire shares of the company and pay cash in return, which is called cash offer. Okay. Sometimes you acquire shares of the company and in return you don't give cash to the sellers. You say, okay, give us your shares, let us acquire you. We will give you shares of the larger company in return. We will give you shares of the larger company in return. This is called share for share exchange. Okay. And sometimes you say, okay, I'm acquiring shares of the company, give us shares. I'm not giving you cash in return. I'm not giving you shares of the larger company in return. I am giving you bonds, debentures in return. This is called bond offer. Now, I can't exactly answer you that when, let's suppose I have some shares of a company and someone comes to me, okay, I'm willing to acquire this company, please give me your shares, please give me your shares. Okay, I say, okay, I will give you my shares. What are you giving me in return? So they say we have three things. Either we can pay you cash offer, give us shares, take cash, or give us shares and take the shares of the larger company, share for share exchange, or give us shares, I will give you bonds in return. This is bonds offer. Now, which one would the shareholder opt? It entirely depends on the appetite of the person, what type of person he is. Some people want to just exit from a company. They don't want ifs and buts in the company. They say, okay, we just want to exit. They will say, okay, take our shares and give us cash so that we are exiting from the company, cash offer. There are some people who say, okay, if I will sell the shares, my ownership in this company would be lost. If you will give me cash in return, okay, I have cash, but my ownership is gone. Such type of people say, okay, I will sell shares, but I want shares of the larger company in return so that I still remain the shareholder of that company, the larger company. They will opt for share exchange. And there are some people who are inclined towards fixed income. They don't want to enter into risk because shares is a risky thing. Okay. They will say, okay, we are giving you our shares, but we want you to give us something that generates a good income stream. They will say, okay, take shares and give us bonds of the company. Bonds or debentures, you know, if I take the bonds, I will get interest, but I won't have ownership rights in the company. So whatever I am taking in return, it entirely depends on my risk appetite. Okay, any questions in this? Just a deferred consideration is the same thing. It's just late, giving cash late or shares late or bonds late. Yes, Meena, first we should learn them separately, then we can talk about mixed. We cannot directly talk about mixed. Bonds offer means I will sell my share and take debentures. Okay. So I compromise my ownership, and rather than taking cash, I took bonds of the company so that I regularly get interest income. Meena, they can be convertible bonds, they can be non-convertible bonds, whatever the question states. Okay, so how does the question come regarding this? How does the question come regarding this? Okay, now let's suppose I am buying a company. Okay, and I can pay them in three forms. Either I can pay them cash, either I can pay them shares, share for share exchange, or either I can give them bonds, bond offer. The question usually asks you that find the percentage gain that shareholders will get under each option. Obviously, if I sell my shares against cash, if I sell my shares against shares, or if I sell my shares against bonds, okay, I'm selling my shares and getting something. Either I will be earning gain or loss. There's no third way. And if I'm selling my shares and getting something in return, either I'm in gain or loss. So the question usually asks you that if you are selling your shares and getting this cash offer or share for share or bonds offer, find the percentage gain that shareholder will get under each option. So how do you find the percentage gain that shareholders get under each option? Let's suppose you are selling your shares and getting cash in return. Okay, you are selling your shares and getting cash in return. How much percentage gain you will get under this? How much gain will you get under this offer? In order to find the percentage gain under cash offer, we simply compare our current share price with what cash we are getting. Okay, if we are deciding how much percentage gain we will get under cash offer, in order to find the percentage gain under cash offer, we simply compare our current share price with the cash offer. Now this makes sense. Let's suppose my shares price is $5. My shares price is $5. I can go in the market and sell for $5. Someone gives me, okay, offer that give me your shares, I will pay you $6. So what was my current share price? $5. I was able to sell it in 5, but someone is giving me 6. In order to check how much gain will I get from this offer, I simply need to compare my current share price, which is 5, with the cash offer, that is 6. That's percentage gain. Okay. Let's suppose the question asks you to find percentage gain. How much gain will you get under share for share exchange? How much percentage gain you will get under share for share exchange? Now, in this case, someone is asking me to sell my shares, and he will not give me cash in return. He will give me shares of the larger company. Now, in order to check if I'm selling my shares and taking shares in return, how much percentage gain I've got, I need to compare my current share price with the combined or larger company share price. Only through this manner I will be able to find percentage. Okay. Obviously, someone says me, okay, sell your shares. My share is worth $5 in the market, and he says I'm going to give you cash of $6. In order to check how much gain I got, I will simply compare my share price with 5 with whatever is giving 6 cash offer to get percentage gain. Okay, someone says, okay, sell me your shares, which is worth $5, and I will give you the share of the larger company in return. Now, in order to see how much gain I've got, I will compare my current share price, which is valued at 5, with the share price he's giving me, larger company share price. This will give me percentage gain. Okay. And if the question asks me to find the percentage gain which shareholder will get under bonds offer. Now, in this case, someone is asking me to sell my shares. Okay, give me your share, which is worth $5, and I will not give you cash or shares in return. I will give you bond, the debenture in return. So how will I find percentage gain under this particular scenario? I simply need to compare my current share price with the market value of that bond. Like someone says me, okay, give me your share. My share is worth $5 in the market. And he says, I will give you bond debenture in return. So if he's giving me debenture in return, I simply need to compare my current share price with the debentures value. This is how I find percentage gain. Okay. So you have three offers that if you sell your shares, you might get cash in return, cash offer, or share for share exchange, shares in return, or bond. So in order to find percentage gain, there's only one thing. What is the worth of your current share? You need to compare it with cash offer to get percentage gain. What is the worth of your current share? You need to compare with the larger company shares which you are getting to find the percentage gain. And in order to find percentage gain under bonds offer, compare your current share price with the market value of the bonds. Okay. Now, one thing, how to find market value of bond. Please note this portion if you would like to, and I can take question. Wajat, obviously that if my share has a worth of $5 in the market, I can easily go in the market and sell it for $5. If someone will offer me $5, I won't be inclined to selling. I say, okay, market is also giving 5, you are giving 5. So you might offer more than 5. That is what premium is. So cash offer usually includes premium. Meena, yes, I will repeat all three. Just wait, please. Amna, you have to wait for that. Okay, so basically, I told you that when someone is asking shares from me, that give us your shares, so I will ask something in return. Either they will give me cash offer, or they will give me shares, share for share exchange, or they will give me bonds. Now, in order to check how much percentage gain I have got under each offer, I need to compare my current share price with the cash price which they're offering. That's where I would find how much I would gain. Okay, this gain is also called percentage premium, Aisha, so it's the same thing. Okay, similarly, when someone is taking my shares and giving me shares in return, share for share exchange, to check the percentage gain, I need to compare my current share price with the share price they are offering, the larger company share. This way I would get percentage gain. And if someone is asking me to give your shares, I gave him my shares, and he's giving me bonds in return. So to compare and check how much gain I've got, I need to compare current value, current share price with the market value of one he's offering. Now, if the market value of bond is not given in the question, it is in WACC as well. Market value of bond you need to find, and market value of bond is computed in this manner. It's defined as the present value of all future outflows related to a bond. It is the present value of all future outflows related to a bond. What are the future outflows related to a bond? A bond carries only two outflows. A bond, in with bond, we have to pay interest. That's an outflow first. And the later stage, the bond has to be redeemed. It's redemption. So market value of bond is defined as the present value of all future outflows related to a bond. A bond only carries two outflows. A bond only carries two outflows. One is interest and one is redemption. Okay, so it is the present value of all future outflows. Two outflows related to a bond. A bond carries interest. Interest has to be paid, and redemption. Calculated on a before tax basis. You don't take tax impact in this. And KD, cost of debt before tax, is taken as discount factor. To find present value, you need a discount factor. So cost of debt before tax is taken as discount factor. Like, I will just give you two short examples, and then we will be moving towards the question. A company has 8% bonds which will be redeemed after 5 years at par. Tax rate is 30%. Cost of debt KD is 10%. Find market value of bond. Now, market value of bond is the present value of all outflows of a bond. A bond has two outflows, interest and redemption. Now, this bond is redeemable after 5 years, so it will go till year 5, 1 to 4 and 5. This bond is redeemable after 5 years, so it will go till 5 years, 1 to 4 and 5. A bond carries two outflows, interest and redemption. You need two outflows, interest and redemption. How much interest this bond is carrying? 8%. How much interest this bond is carrying? 8%. 8% of what? Always par. This bond is carrying interest of 8%. 8% of what? Par. And par, I told you, is always 100. Par is always 100. Spot is always 100. So this bond will be redeemable after 5 years at par. So it will pay interest of 8% for 5 years on 100. That is $8, no tax impact. And redemption is at par. After 5 years, there is another outflow. You need to pay redemption. That is par. Par is always 100. A bond would carry only these two outflows, interest for 5 years and redemption. Okay, you can net them all to get net cash flows. It's 8 108. You can net them all to get net cash flows 8 and 108. Multiply it with the discount factor, that is KD, 10%. Multiply it with the discount factor, that is KD, 10%. I can find the discount factor KD 10% in annuity table for 4 years. 3.169, and year 5 is separate. I can see that in the present value table for year 5. It's 0.621. Pay attention, please. Now, if we do net cash flows into discount factor, we get present value. 0.621 into 108, it's 67, and 8 into 3.169, it's 25. If we add them all, the total present value, it's 92. Now listen to my thing carefully. This is the total present value of all future outflows of this bond. Do you agree with me? This 92 is the total present value. Total present value of what? Of all the outflows, two outflows. So this 92 is the present value of all outflows of a bond. By definition, this is called market value of bond. The present value of all outflows is called market value of bond, and it is quoted as 92 by 100 in financial markets. This is quoted as 92 by 100 in financial markets. So the total present value of all future outflows, that's the market value of bond. Whenever the question asks you to find the percentage gain under bond offer, you would be needing market value of bond. It's simply the present value of two outflows, interest and redemption, discounted at KD. Okay, any questions, please ask. I'll copy this stuff. Rizwan, in that case, you can refer to the recording, please. I will be doing one more example. You can catch to that, and you can always view the recordings. Okay, now There is a problem with few of the students. They are constantly messaging me. I think there are 3 students that the annuity factor at 10% is 3.791. Okay. You can clearly see that the annuity factor at 10% is 3.791, but that's for 5 years, 1 to 5. I have taken 1 to 4. So you can refer, it's for 4 years, 3.170. Now, what I think, like the way you have been taught, this could also have been done like this. It's present value of 2 outflows interest redemption. So you write like this, 1 to 5 and 5. Interest redemption. So 1 to 5 interested 8 and redemption is 100. You get net cash flows 8, 100. Discount factor KD 10%. You can take it 3.791 and 0.621, and you can get present value 62 and 8 into 3.791, 30. You still get 92, dear. So check what we have done on the screen. I've written 1 to 4 and then 5 separately. You are trying to do 1 to 5 and 5 separately. I have proved that the answer in both cases remain the same. Okay, so no need to worry about it. Similarly, sometimes the question states a company has 5% bonds which will be redeemed after 8 years, or redeemed after, let's suppose, 4 years at 20% premium to par. Tax rate is 30% and cost of debt is 12%. Again, find market value of bonds. You need to remember that market value of bond is basically the present value of 2 outflows interest redemption. This bond is redeemable after 4 years. So it's 1, 2, 3, and 4. Work till 4 years, or you can write 1, 2, 4, and 4. Interest for 4 years is 5% of what? Par value 100. So it's 5. And redemption after 4 years is 20% premium to par. So 20% premium to par means 20% above par. Okay, so 20% above par means par value is 100, 20% above par 120. You can net them all to get net cash flows 5, 125. Discount factor is KD 12%. Okay, so you can refer to 12% discount factor. For 4 years or 3 years, 3 years, 2.402 and 12% at year 4, 0.636. You get the present value. It's 12. 125 into 0.636, it's 80. And again, the total present value of all outflows is 92. This is the market value of bond quoted as 92 by 100. Okay, any questions if you have, then ask, else we will move towards the past paper question for today. You can open the question provided. Abid Hussain, the voice problem is most probably from your end because everyone is okay with it. Jagat, the definition of market value of bond is the present value of all outflows. calculated on a before tax basis. So you cannot take tax impact here. I'm just opening the software, so the screen is paused for a bit. Okay, there are many questions who constantly message on the group that which question is being done today, which question is being done tomorrow. So kindly note that the questions are provided by ACCA right in this questions tab. So why don't you see the question from there rather than asking from everyone? Almir and Alvin, you can refer to the market value of bond definition is the present value of two outflows, interest redemption, calculated on a before tax basis. That's what the definition says. So you cannot take tax. Adil Said, it's attached. I am able to see that. If you click the handouts tab, it's present with day 5, because else everyone would have complained about this. Amina, I've already shown in the above question, so you can do it yourself, 1 to 4, and then 4, it will produce the same answer, okay? In 1 to 4, write just interest, and in 4, write just redemption value, and take the discount factors of 1 to 4, and then 4, you will get the same answer. Okay, so let's just start reading the question. And we will tailor it according to what we have discussed today. Okay. Sigara Company is a listed company producing confectionery products which it sells around the world. So Sigara is a listed company producing confectionery products which it sells around the world. Okay. It wants to acquire Dentro Company, an unlisted company producing high quality chocolates. Sigara proposes to pay for the acquisition using one of the following three methods. Okay. So first, the important thing is that there is a company called Sigara Company, which wants to acquire Dentro Company. Okay, that means Sigara Company is the buyer. Okay, and Dentro Company is the seller. Okay, that's what we have got from the first line of the question, that Sigara Company is a listed company producing confectionery products which it sells around the world. It wants to acquire Dentro Company, an unlisted company producing high quality luxury chocolates. Sigara proposes to pay for the acquisition using one of the following three methods. Okay, method one, a cash offer of 5 per Dentro share. Method two, an offer of 3 of its shares for 2 of Dentro shares. Okay, and method three, an offer of 2% coupon bond in exchange for 16 Dentro shares. The bond will be redeemed in 3 years time at its par value of 100. Okay, Sigara wants to acquire Dentro. Okay, Sigara is planning to acquire Dentro, and Sigara is proposing to pay for the acquisition using one of the following three methods, not all three, one of three. The first, okay, give us, we were going to acquire you. That means we're acquiring your shares, take cash of 5 per share. Method two, give 2 of your shares and I will give 3 of my shares. Share for share exchange. Give you 2 shares, an offer of 3 of its shares for 2 of Dentro shares. Give us 2 shares, take 3 shares. And method three, an offer of 2% bond in exchange for 16 shares. Give us 16 shares, then we will give you a bond. I will not give you a bond on 1 share. Give us 16 shares, I will give you 2% coupon bond. Coupon means interest. The bond will be redeemed in 3 years at its par value of 100. We will redeem it after 3 years. Extract from financial statements of both companies, Sigara and Dentro. Now the revenue of Sigara and Dentro is given, then profit before tax is given, then taxation is given, then PAT is given, then dividends are paid, so retained earnings, and non-current assets are given, current assets are given, non-current liabilities are given, current liabilities are given. Share capital 0.4 par value 4400 for Sigara, and 0.4 per share par value 500 capital for Dentro. You can divide them to get number of shares. So share capital is 0.4 per share 4400. So Sigara buyer, $4,400 divided by 0.4, 11,000 shares, and Dentro seller has 0.4 par value 500. So 500 divided by 0.4, 1250 shares. Okay. Reserves are also given. Till now, the information is just normal, that Sigara plans to acquire Dentro through 3 methods, either cash or 3 of its shares for 2 shares, and again 16 shares, 1 bond. Then you are given financial statement extracts. Sigara's current share price is 3.6 per share, and it is estimated that Dentro's PE ratio is 12.5% higher than Sigara's current PE ratio. Okay. Sigara's current share price is 3.6 per share. Okay. and it has estimated that Dentro's P/E ratio is 12.5% higher than Sigra's P/E ratio. Now, this is a very important statement that Sigra's current share price is 3.6 per share, and it has estimated that Dentro's P/E ratio is 12.5% higher than Sigra's P/E ratio. Dentro's. Sorry, Sigra's. This is not something which I have written on my own. It's clearly mentioned in the question that Sigra's share price is 3.6 per share and Dentro's P/E ratio is 12.5% higher than Sigra's P/E ratio. That means if Dentro's P/E ratio is 12.5% higher than Sigra's P/E ratio, if some way I am able to get Sigra's P/E ratio, then it would be very easy for me to get Dentro's P/E ratio, right? Dentro's P/E ratio is 12.5% higher than Sigra. So if I'm able to get Sigra's P/E ratio, I don't know what the requirement is, but this particular line should alarm me that Sigra's share price is 3.6 per share and Dentro's P/E ratio is 12.5% higher than Sigra's P/E ratio. That means if you're able to get Sigra's P/E ratio, you can easily get Dentro's P/E ratio. So let's find Sigra's P/E ratio. And the formula of P/E ratio is market price per share divided by earnings per share. Sigra's share price is 3.6 per share and Dentro's P/E ratio is 12.5% higher than Sigra's P/E ratio. That means if you are able to get Sigra's P/E ratio, you can easily get Dentro's P/E ratio. So Sigra's P/E ratio, let's find market price per share over earning per share. So Sigra's market price per share is just given right above 3.6 per share. Let's find Sigra's earnings per share. Sigra's earning per share. What is the formula for earning per share? PAT less preference dividend over number of ordinary shares, right? So let's check Sigra's PAT, profit after tax. What is the profit after tax of Sigra? You can see the profit after tax of Sigra is 4950. Less preference dividend, there is no preference shares in Sigra, so no preference dividend, okay? Divided by number of ordinary shares, we have just seen above that Sigra buyer has 11,000 shares, okay? So you will get EPS of Sigra as 0.45, and once you get Sigra's EPS, you can easily get Sigra's P ratio. That is market price per share uh, 3.6 divided by earnings per share 0.45. Market price per share 3.6 over earnings per share 0.45. I'm not applying the formula so that you can clearly see that it's 8 times. This is Sigra's P ratio, 8 times. And it states Dentro's PE ratio is 12.5% higher than Sigra. So Sigra is now 8 times. You can increase it by 12.5%. This makes it 9 times. Okay. I didn't know what the requirement is, but I did quite a lot of tasks by just reading one line of the question. I'm referring back and repeating so that if you have any questions, you can ask from me regarding this. Okay. We were comfortable with the first paragraph, okay, that SIGRA is planning to acquire Dentro and giving either cash or 3 of its shares against 2 shares or bond against 16 shares. The balance sheet P&L were given, and the second last paragraph states SIGRA's share price is 3.6 per share and Dentro's P ratio is 12.5% higher than SIGRA's P ratio. So I said, okay, if Dentro's P ratio is 12.5% higher than SIGRA, if somewhat I am able to get SIGRA's P ratio, I will be easily able to get SIGRA. So I found SIGRA's P ratio. The formula of SIGRA's P ratio is market price per share over earning per share. So market price per share was given 3.6, earnings per share was profit after tax less preference dividend over number of shares. Once you got SIGRA's P ratio, you got Dentro's, which is 12.5% higher. And let's just finish the question. If you have any questions, you can then ask. SIGRA's non-current liabilities include a 6% bond redeemable in 3 years at par, which is currently trading at 104 per 100. SIGRA estimates it could achieve synergy savings of 30% of Dentro's equity value by eliminating duplicative administrative functions, selling non-current assets, and through reducing the workforce numbers if the acquisition was successful. SIGRA estimates it can achieve synergy savings of 30% of Dentro's value by eliminating all these functions. Okay. Now, before moving to the requirement, let's just read the question once again, all of you, and copy this stuff if you want to copy which I've written. Then we will move towards the requirement, what we have to do. And in the meantime, if you have any questions, you can please ask. Meena, Dentro's P ratio is 12.5% higher than SIGRA. So SIGRA was 8 times. I just increased it by 12.5% to get 9 times. And same for you, Bilal, as well. Shalima, the working screen is in front of you. I've opened the working screen. Yes, Meena, that's right. Meena, you can copy the information definitely. Bilal, what is your question? You are saying question mark, whereas I've answered already your question. No, Ali Akbar Iqbal, if the dividend is not specifically mentioned preference dividend, then it's always ordinary dividend. Bilal, SIGRA is not 9 times. SIGRA is 8 times as computed above in row number 8. Dentro's ratio is 12.5% higher than SIGRA. So I just increased SIGRA's P ratio 8 times by 12.5% to get 9 times. Okay, now let's move towards the requirements because we have studied the question that the summary of the question is there is a company called Sigra company which wants to acquire the intro company and it is willing to pay three things, one of three things, either paying cash, offer of 5 per share, or 3 of its shares against 2 shares and bond against 16 shares. The profit and loss account and balance sheet were given, and after that there was 2 paragraphs in which one paragraph was very key, that Sigra's current share price. Even without knowing anything what is asking, I still did some working, and that's what I should react, that Sigra's share price is 3.6 and Dentro's P ratio is 12.5% higher than Sigra. So I took the workings at firstly found Sigra's P ratio, which was market price per share given over earning per share. I must know how to compute earning per share. Once I got Sigra's P ratio 8 times, Dentro's P ratio is 12.5% higher. I made it 9 times. Sigra's non-current liabilities include the 6% bonds redeemable in 3 years at par, which is currently trading at 104 per 100. And Sigra estimates it could achieve synergy savings of 30% of Dentro's equity value by eliminating duplicative administrative functions, selling assets, and through relief. Whenever Sigra or any other company is acquiring some other company, when 2 companies get combined, they usually get synergy savings, the benefits due to combination. So that is a benefit, 30% of the Dentro's value. Okay. Now, requirement A is worth 16 marks. Estimate the percentage gain on a Dentro share. Dentro is the seller. So estimate the percentage gain on a Dentro share under each of the above 3 payment methods. You need to estimate that percentage gain, which I taught you right at the start of the class. That you need to estimate the percentage gain on a Dentro share under each payment method. Comment on the answers of it, and then you have to comment as well. So my requirement is to estimate the percentage gain on Dentro share under each 3 payment methods. The first payment method is the cash offer. Second payment method is the share for share exchange. Third is the bond offer. I need to find percentage gain on Dentro share under each payment method. Yes, Teji, you are absolutely right. So my requirement is to find percentage gain on a Dentro share under each payment offer. So the first offer, is cash offer. Percentage gain on a dentro share under each payment method. So I am firstly finding percentage gain on a dentro share under cash offer. Okay. Now, if you refer to my lectures at the beginning, I told you listing. How will you find percentage gain under cash offer? It's common sense as well. Now, if I need to find percentage gain on dentro share under cash offer, I need to compare the current share price of dentro, because it is asking percentage gain on dentro share. So I need to check current share price of dentro and compare this current share price with cash offer. Now, this is the only way which will make sense to find the percentage gain. There is no other way. That if you plan to find percentage gain on a dentro share under cash offer, you simply have to compare the current share price of dentro with the cash offer. Now, what is the cash offer? I know the cash offer is $5. I know the cash offer is $5. Now, if you need to find percentage gain under cash offer, I've told you that you simply need to compare the current share price with the cash offer to find the percentage gain. This is what you were taught in the beginning of the class as well, that whenever the question asks you to find percentage gain under cash offer, and it is asking not percentage on Sigra share, else you would have taken current share price of Sigra. It is asking percentage gain on a dentro share, so you need to take current share price of dentro and compare with the cash offer. Now, what is the current share price of a dentro share? If you look at the whole question, the current share price of dentro share is not given. The current share price of dentro share is not given. So you need to apply some techniques to find the current share price of dentro, because if you are unable to find current share price of dentro, then most probably you won't be able to fulfill your requirement to find percentage gain. Okay, so I need to do anything and do the percentage gain under cash offer. Okay, so how to find the current share price of dentro? Now, what information you have for dentro? You see, what information you have for dentro? You have revenue of dentro, you have profit before tax, you have tax with PAT, you have retained earnings, you have non-current assets, etc., share capital. You can find current share price of dentro using the net assets valuation method, because you have assets of the company. You can find current share price of dentro using net assets valuation method. Or you can just recall, we have just found the PE ratio of dentro 9 times. So the formula of PE ratio, is the market price per share divided by earning per share. So you have the PE ratio, which is 9 times. You have the PE ratio, which is 9 times, right? You need to find market price per share. You will get this market price per share. You will get this market price per share if somehow you are able to find EPS. If somehow you're able to find EPS, and again, you can easily find Dentro's EPS as well, because you have just found Sigra's EPS. So Dentro's EPS is also easy to compute. It's PAT. What is the PAT of Dentro? It's 625 minus preference dividend 0 divided by number of ordinary shares. We just computed 1250. Okay, so this makes it 0.5. And once you have the earnings per share 0.5, you can simply cross multiply the formulas to get market price per share or the current share price, that is 0.5. Market price per share, the current share price is the same. So this is how you got the current share price of Dentro. You can apply the net assets valuation method and find the share price. That's perfectly acceptable. Or you can say that I have the P ratio of Dentro 9 times, market price per share or EPS. If I'm able to find EPS, I can get market price per share. Now I have the market price per share or current share price of Dentro. That is 4.5. In order to find percentage gain under cash offer, I need to compare it with the cash offer. So cash offer is 5. To take the percentage gain, just deduct both and divide by the base. Just deduct both. The gain is 0.5. And to find percentage gain, divide with the old one, because you always find percentage by dividing with the previous one. Like the price has moved from 10 to 12. It's increased by 2. To take the percentage, you will divide by the old one, 10. So 0.5 divided by 4.5, the percentage gain is approximately 11.11%. You have fulfilled the first thing, that the percentage gain under cash offer has been computed. For that, you needed current share price of Dentro. Compared with cash offer, the current share price was not given, but cash offer was given. However, I need to find current share price and I applied the PE formula. Okay, you can copy this. If you have any questions, please ask. Mukhtar, we cannot adjust this thing in a question. It has to be a separate question for that, because the information is lacking here and I cannot just tailor that requirement according to this. Meena Jain, the percentage is computed by taking the difference and dividing it by the base value, previous value. Amna, it's just all assets divided by shares. All assets divided by shares. Okay, Fasi. So the current share price of Dentro was 4.5, means Dentro shareholders had the share which has a price of 4.5, and someone is giving them cash of 5. So if someone is giving them more than what their current value is, obviously it's a gain. Yes, that's what they're asking, Alvin, that percentage gain for Dentro share. So Dentro shares was valued at 4.5 currently, and they got 5. So it's a gain for Dentro. Meena, the gain is zero point 0.5 in dollars because the current share price is 4.5 and they are paying you 5. That 5.5 gain is in dollars. The question isn't asking gain in dollars, it is asking in percentage. So you need to divide it by the base value, 4.5. So I've taken the questions regarding this cash offer. So it was a lot of computations that to find percentage gain on Dentro share at a cash offer, current share price must be computed with cash offer. Cash offer is given. Current share price of Dentro, because I need to find percentage gain for Dentro, that was not given. So I computed it through PE ratio. Okay. So now it's the time for a break of 10 minutes, and after that we will continue the remaining. Okay. Okay, so let's resume the class. And before the break, we were discussing this Sigra company question. And when we talked about this Sigra company question, we were asked to find the percentage gain under cash offer. You were asked to find the percentage gain under share for share exchange, and you were asked to find the percentage gain under bond offer. Okay, so we started this thing by finding percentage gain under cash offer. Okay, now when we find percentage gain under cash offer, so we needed to compute current share price with cash offer. That's what the format states. That's what I have taught you, that whenever you are asked to find percentage gain under cash offer, simply compare the current share price with the cash offer. So since you are asked for percentage gain on Dentro share, so you need to find current share price of Dentro and compare it with cash offer. Okay, so what is the current share price of Dentro? The current share price of Dentro is 4.5. We didn't had it, so we had P ratio of Dentro, so we applied the P ratio formula and got the current share price. Cash offer is 5, you got the percentage. Okay, now let's move towards the next thing. Okay, there are 2 or 3 messages that can't hear you, audio stuck. So what is the problem? Are you able to hear me? Certainly we will try to cover. Okay, it's fine. It's fine. Okay, so now we are moving towards the next thing. That is percentage gain on a dentro share under share for share exchange. Now, if I move towards the format which I taught you, that when the question asks you to find percentage gain under share for share exchange offer, you need to compare again your current share price, what is the value of your share, with the share price of the larger company, which the shares they are offering you. Okay, this is how you find percentage gain. So you make this format that I will compare my current share price of Dentro with the combined / larger company share price. This is how I will get percentage gain by taking current share price of Dentro, what is the current share price of Dentro, and comparing with the combined or larger company share price in order to get the percentage. Okay, now we all know what is the current share price of Dentro. It was not given in the question, so we applied the P ratio approach and found its current share price is 4.5. Now we need to find the combined larger company share price. Pay attention. Combined / larger company share price, because they are asking that give us 2 shares of the company. Sigra is saying give us 2 shares and we will give you 3 of our shares. So 3 of its shares against 2 shares. Okay, so I will find the combined larger company share price because I am giving them my share and they're giving share in return. Obviously it would become the combined company. So if I sell them my shares and they will give me the share again, so that would be of combined company. So I will be needing to find combined company share price. Now it's very easy to find combined company share price. Just combine both companies. It is very easy to find combined company share price. Just combine both companies. So value of Sigra. Value of Sigra is currently 3.6 per share. Remember, 3.6 per share. Multiply by it has how many shares? 11,000 shares. 39,600. And show the workings in this bracket. 3.6 per share. Multiply by 11,000 shares. This is the value of Sigra. I need to find combined company share price. So this is the value of Sigra. Let's get value of Dentro. Now value of Dentro is current share price, it's 4.5, multiply by the 1250 shares. It's 5625. Show the working. 4.5 per share, multiply by 1250 shares. Now, if you add them both, you get the combined company value. But I need combined company share price. If you add both, you get the combined company value. I need combined company share price. So combine both companies and divide by the shares, get combined company share price. But the last paragraph of the question states that Sigra estimates it would achieve synergy savings of 30% of Dentro's equity value by doing this. So they will also get synergy benefit of 30% of Dentro's equity value. So 30% of Dentro's equity value means 0.3 of Dentro's value. Dentro's value is 5625. So they will get synergy benefits of 30% of Dentro's equity value by combining both. So add them also 30% of 5625. This gives you the combined company value. Sum all of them, P21 to P23. This is the combined company value. But I need combined company share price. I need combined company share price. So this is the combined company value. You can divide it by the combined number of shares. You can divide it by the combined number of shares. So you will get combined company value per share or combined company share price. My objective was to get combined company share price. So I just combined both values and divided by shares to get combined company value per share. But there was a synergy benefit as well. We added that. Now the combined company value divided by shares to get combined value per share. Now what are the combined number of shares? People say, okay, the combined number of shares are 11,000 plus 1250. Wrong. The combined number of shares are 11,000 plus 1250. Wrong. Why? Because I am Sigra and I acquired 1250 shares of Dentro. Okay. Now listen to this thing very carefully. That's highly important and people make mistakes in that. I am Sigra. I have 11,000 shares and I acquired Dentro. Took their 1250 shares. Took their 1250 shares. Now Dentro is finished. I will just tear that share certificate and throw it. The combined shares are 11,000 because whoever owns Sigra's shares is now the owner of Dentro as well. I took Dentro shares 1250, gave them cash. I took Dentro shares 1250, gave them cash, and I teared that certificate and threw it away. The combined shares are still 11,000. Why? Because once I acquired Dentro and teared that certificate, the shares are still 11,000. Whoever owns Sigra, he is now the owner of Dentro. Let's suppose I bought Dentro's 1250 shares and gave them bonds. Again, I will take that certificate, tear that. Still the combined shares will remain 11,000 because whoever owns Sigra's shares, he's the owner of Dentro. But here what is happening? I have 11,000 shares, okay, of Sigra. I acquired 1250 shares of Dentro, took them and teared that certificate. But I didn't pay them cash. I didn't give them bonds, else the shares wouldn't have increased. I gave them shares in against and I took their 3 shares. Sorry, I took their 2 shares and gave them 3 shares. So do you think if I give the shareholders more shares, now the shares will increase? Yes. This will make it $1,875. So the combined number of shares would become 12875, and you will divide the combined value with the combined number of shares. The value per share would be 3.64. So how did I get it? I am repeating it again. Please pay attention. And this is something very important and people make mistakes in that. Okay. The problem is that whenever the question asks me to find percentage gain under share for share exchange, usually I will compare current share price with combined larger company share price. That's the only way to find percentage gain under share offer. So current share price of Denver is 4.5. Compare with combined larger company share price. How to get combined company share price? That combine both companies' values, synergy benefits, and divide by the combined shares. Now listen carefully. The combined shares doesn't mean adding both of them. If I took 1250 shares of Dentro and gave them cash, I will tear that certificate. Dentro no longer exists. Whoever owns Sigra shares is now the owner of Dentro. So the combined shares will remain 11,000. Now, if I took 1250 shares of Dentro and gave them bonds in return, I will just tear that certificate. No shares increase. Still, the combined number of shares are 11,000. Now, if I took 1250 shares of Dentro, tiered that, and gave them 1-for-1 share, I took them 1250 shares and gave them 1250 shares. Now, since I issued more shares, the combined share will be 11,000 plus 1250, 12250. Here the ratio is different. I took 1250 shares, tiered that certificate, but I issued more shares. Against 2 of their shares, I issued 3 shares. So I issued more shares. That's why the combined number of shares increased and the combined company share price is 3.64. Any questions with combined company share price, please ask, then I will complete this part because it's still left. Ratio of 3 to 2. So I need to eliminate those 2 shares and increase the shares by 3. That's the cents divided by 2 multiplied by 3. Sabrina, I'm just showing calculations so that you understand. Obviously, examiner can check from the status bar. It's just dividing by the number of shares, you know. Yes, Kishan, it will. Yes, Anatoly, when you are acquiring a company, basically you tier those share certificate, their shares won't be added. But if you're issuing more shares against them, then obviously the shares would increase. And in share for share exchange, that happens that we take the company shares and issue new shares. That's why the shares increase. Now, had I taken the 1250 shares and paid the cash, I would have just thrown that certificate. So combined number of shares remain 11,000. If I would have taken their 1250 shares and given bonds, I would have tiered those certificates. The shares shall remain 11,000. But since I took their 1250 shares and had I issued shares on 1:1, that means I have 11,000 shares. I took their 1250 shares, threw that, and issued 1:1 share, 1250 more shares. So the combined shares would be 12250. Here, what is the case? I took their 1 to 5 their shares, and on their 2, I issued 3. So divided by 2, multiply by 3, so that the new number of shares are increased, and in that case, it's 12875. No, Kritika, you don't need to. Meena, let me finish the class. I've told this in all 5 days that once the session will be over, I will share it on group. I can't just leave the question and start finding the important questions, okay? Okay, so let's just complete this. Yes, Fajad, that means those having 2 shares in intro, they sold their 2 shares and now got 3 shares. Okay, let's just finish the percentage gain part now on Dentro share and the share for share exchange. Now, I have told you that in order to find percentage gain under share for share exchange, take the current share price of Dentro, that's 4.5, and compare it with combined company share price. Now, the combined company share price is 3.64. People say the current share price was 4.5 and combined share price was 3.64. We are in loss because you are doing wrong workings. It's not the case that Dentro gave its 1 share and got 1 share of the combined company. What happened is Dentro's current share price was 4.5 and it gave its 2 shares. Okay, the worth of which is 9. It got share of combined company, which is 3.64 per share, but against its 2 shares, which is 4.5, it got a combined company share, which is 3.64, and it got 3 shares, right? So the worth is 10.92. Now you can take the difference and divide it by the base or starting point. The difference is 1.92 gain. To convert into percent, divided by 9 to 100. It's 21.33%. It's 21.33%. Okay, so we have got the percentage and gain under the second offer as well. Now you can copy this, and if you have any further questions, please ask. Because that doesn't make a like with like comparison that the current share price is 4.5 and the combined company share price is 3.64, so loss. See, the current share price is 4.5. We gave 2 shares of our company Dentro worth 9 rupees and got 3 shares having a worth of 3.64, so we are in game. Okay. I mean, unfortunately, your question is just about the percentage gain. It's just the difference divided by the previous value. That's how you calculate gain. Let's suppose you had a thing of 10 and it became of 13. So how will you calculate the percentage gain? Take the difference 3 over 10. So this is what is happening in both of the above cases as well. IUNI percentage gain is the difference 1.92 over 9, the previous one. Alvin, I'm just referring to that again. If it's purchased using cash, how much are the shares? Mohammed Tanvir Hussain, why will you take the pre-acquisition price? Because they are taking shares and issuing new shares. So it should be of the larger company or previous company. Tatvar, wait, I will just tell it in more detail. Meena Jain, 10.52 is not the value, it's 10.92. Why are you taking 10.52? I don't know. And Tatvar, if you can see, we have multiplied it with 3 in the value. If you are asking about the percentage gain, Dentro is giving its 2 shares and taking 3 shares. So Dentro is giving its 2 shares worth 4.5. So it should be multiplied with 2 shares. Okay, now to make sure that tricky part is not worrying for you, because I expected that students will find that part tricky because it has the case 2 is to 3. Now understand one concept. For example, there is a company A. It has 10,000 shares. It is willing to buy company B. It has 2,000 shares. There is a company A, which is willing to buy company B, and company B has 2,000 shares. Now, what will company A buy? Company A will buy company B shares. No assets, no liabilities. Once it buys shares, everything. Let's suppose company A bought 2,000 shares of company B and paid cash. You know what will happen? To combine number of shares. Company had 10,000 shares, they took 2,000 shares of company B, paid cash, and they will tier those share certificate. That's it. The combined number of shares remain 10,000 because whoever is the owner of company A's 10,000 shares, he will own company B because he has paid cash and got the shares. So there are no shares of company B now. They're taken, absorbed into this. The combined shares are still 10,000 and they will just tier those share certificate. Let's suppose the other case. Company A bought 2,000 shares of Company B and paid bonds, gave them bonds. Okay, they took 2,000 shares and took bonds. What will happen to combined number of shares? Company bought 2,000 shares of Company B, tiered those certificates, and paid bonds in return. The combined number of shares would still remain 10,000 because whoever owns these 10,000 shares does own those 2,000 shares as well. There is no separate thing. We just throw that certificate away. Those who have 10,000 shares own Company B as well. Okay. Let's suppose Company A bought 2,000 shares of Company B, paid shares on 1:1 ratio in return. Now what will happen to combined number of shares? Pay attention. Combined number of shares were 10,000, right? I took 2,000 shares of Company B, tiered that certificate, threw it away. Still 10,000. But when I took their 2,000 shares, I didn't pay cash or anything. I paid them 1:1 ratio, 2,000 more shares in return. Now I had 10,000 shares and I gave them 2,000 more shares. Now my combined number of shares will become 12,000. Okay. Let's suppose Company A bought 2,000 shares of Company B, paid shares in return on 2 shares against their 1 share. Now, against their 1 share, I issued 2 shares. Okay. So what will happen to combined number of shares? Pay attention. Now I had 10,000 shares. I took 2,000 shares of Company B, tiered that through the certificate. I didn't pay cash, didn't pay bonds. I gave them shares. So now I'm issuing more shares to them. Now the shares would increase. But against their 1 share divided by 1, I issued 2 shares. So against their 2,000 shares, I have to issue 4,000 shares. So now my combined number of shares would be 14,000. This is what is exactly happening in this question. Please pay attention. Sigra had 11,000 shares. They took 1250 shares of Dentro, tiered those certificates. But against their 2 shares, they issued 3 more shares. So combined number of shares would become 12875. Hope this helps. And if you want to copy, you can ask. And if you still have any doubt, please feel free to ask. Masper, that's my job. Amna, please, I'm requesting you, please let me finish the question. We cannot just remove the question and go towards the area in which you were facing problem. We have to follow the standard practices. Yes, Mukhtar. Okay. There is nothing on the upper part. It's just company and company B are entering into a transaction. So this is the main thing which is on screen, and I'm just changing it after a minute. Please quickly copy this if you want. As per, there is nothing on the upper part. Okay, now let's move towards the last part. Percentage gain on dentro share under bonds offer. Okay, and I've already told you that whenever you need to decide percentage gain under bond offer, you need to compare your current share price of dentro with the market value of bonds. Okay, in order to find the percentage gain under bonds offer, current share price with the market value of bonds. Okay, now we all know what is the current share price of dentro. It's 4.5 per share, and you need to compare it with market value of bonds. Okay, so I have the current share price. I need to compare it with the market value of bonds. So in this question, if you look, there's this an offer of 2% bond in exchange for 16 shares. The bond will be redeemed in 3 years at its par value of 100. Okay, the market value of bond is not given. We need to find market value of bond. I've already taught you that market value of bond is basically the present value of two outflows, interest and redemption, discounted at KD, calculated on a before tax basis. Okay. And this bond is being redeemed after 3 years. You can apply an UT approach, you can apply a separate years approach. It's completely your choice. To find market value of bonds, I will be taking two outflows. One is interest and one is redemption, right? So you all know that interest is 2% coupon. So 2% of what? Par value 102. And redemption is at par after 3 years at 100. Okay. So you net them all to get net cash flows. It's 2, 2, and 102. Multiplied with the discount factor, that is KD. What is the KD, cost of debt? There is no information about cost of debt given in the question. So you can take this SIGRA's non-current liabilities into the 6% bond. 6% interest paying bond, so interest is the debt cost. You can take 6%. I need to refer to the tables. So 6% year one is 0.943. Then it's 0.890 and 0.840. Right. This net cash flow should be multiplied with discount factor to get present value. So you can do P32 multiplied by P33. Okay, and you can just write this. Okay, and just you need to total them to get total present value of all outflows. This is the present value of all outflows. This is called market value of bonds. The total present value is 85.68 plus 1.78 plus 1.886, approximately 90. Okay. Now, in order to find percentage gain under bonds offer, you need to compare current share price of Dentro with the bond offer. Now, people do again this thing. What is the current share price of Dentro? It's 4.5. Compare with the market value of bond, as you taught in the class that current share price needs to be computed with market value of bonds. So market value of bonds is 90. And a whopping percentage gain, but you're still again making things difficult for you. Okay. The current share price of Dentro is 4.5. You are giving your share. And against that, you are taking bonds, which has a market value of 90. But the problem is, they are not giving you bonds against one share. Okay, this 90 is being provided against 16 shares. So that means per share they are offering you 90 over 16, 5.625. Okay, so current share price is 4.5 and they are offering you per share approximately 5.625. You can take the difference and divide by the old one. It's approximately 25% gain. Right? You can copy this. If you have any questions, please ask. So Sumai, you are giving, but the question isn't asking for who is giving. Question is asking for Dentro, who is taking. So Dentro is taking 10.92 over 3 shares against 2 shares of 9. So Dentro is having gain. Ali Akbar Iqbal, we have taken the interest rate on bonds as the KD discount factor. People who are worried, they can take a separate assumption as well. No need to worry about it. Jagat 104 is the market value of existing bond. The new bond which is being issued, the market value is not be provided. Abed Hussain, yes, you can do through IRR. Anatoly, you can do through IRR. Moin, you can perform IRR. Any current share price, I think you have joined late in the class. This was the first thing we did way back in the class, that current share price is through PE ratio method. So you need to take the recording. Mohammed Tanvir, we are assuming interest rate is the debt cost. A demo method 3 is stating that they are giving a bond against 16 shares. Anatoly, if that would have been the case that we will lose marks on different assumption, I would have never taught you this. Kinda, the objective is not just to follow blindly whatever is being done just at the back. You should do that. There are different assumptions. An examiner always welcomes those assumptions, so there is no problem. Even if you go in my investment appraisal class or the BSOP class, there might be some steps different. They're all acceptable. Manu, for that, you have to refer to your weighted average cost of capital or WACC portion, because interest offered on bonds is the debt cost. Bond is the debt, so interest on bonds is the cost of debt. Beji, you can do that. No problem in that. You can do your approach. Amina, let me finish. Obviously, we will answer that. Abed, you have to contact me later for this. Adereto, you have two options. Either you can multiply 4.5 by 16 shares and compare with 90, or you can divide 90 with 16 shares. It's your choice. You can assume that, Wahab. Anjali, this time I have not used NUT, and I believe you are looking at the NUT table. I've taken year two separately. So I won't look at a NUT table. Yes, Esther, it's right, it's acceptable. No, Shalima, this is of mergers and acquisitions. Minal, I'm absolutely worried on in every three options. Why were you not able to get percentage gain? Because that's the most easiest thing among all. And in all three requirements, you have the same thing. So first, I want you to tell me how you are calculating percentage gain. Please write in the message box and let me know, because you're constantly regularly making the same mistake again and again. Last time you took the wrong value, and this time again you are asking how the 25% came. I've told you thousands of times that it's the difference divided by old value. So please show me your working, what problem you are making. It's fine. 5.625 minus 4.5 over 4.5, it's fine. So what is the problem? What answer you are getting? We also did the same thing. 5.625 minus 4.5 divided by 4.5. So what problem you are getting? What answer you are getting? Yes, you might not be putting bracket. You are just doing on calculator 5.625 minus 4.5 over 4.5. So mathematically, the calculator will first divide 4.5 by 4.5 and give you wrong answer. So put the bracket in the numerator, the bracket. 5.625 minus 4.5 in the bracket, take the difference and then divide it by 4.5 and tell me, are you getting the correct answer now or not? Thank you. Okay. Tajwar, this is the old bond. We are issuing new bond, 2% coupon. It's mentioned in method 3. So it is better you look at that. Okay, now if you look at the requirement of this question, the requirement states estimate the percentage gain on a dentro share under each of the three payment methods. So I have now found the percentage gain on dentro share under each of the above three payment methods. So I found the percentage gain under cash offer, then bond offer, then share for share, and comment on the answers obtained. Now this is a thing that comment on the answers obtained, student feel, oh my god, how much theory I have to write, what is this requirement all about, I will lose many marks. Because these thoughts come in your mind because you never ever read the marking scheme. Okay, you will get a crystal clear. Now what would I do if I had been a student and the question would ask percentage gain under each of the three payment methods? Just see, I have performed a hell lot of calculations here. See, right from the beginning. Now the question asks for percentage gain under three payments offer. So I have the percentage gain under each offer. Cash offer 11.11%, percentage gain under bond offer, share offer 21.33%, and under bond offer 25%. So I will write comment on the answers obtained. The question is asking comment on the answers obtained. So you need to comment on the answers which you have got. So you've got three answers. Comment on that. Like I would have written the percentage gain under cash offer is 11.11. Share for share is offering more and bond is offering highest. So it is likely that Dentro shareholders will opt for bond offer. But there is a drawback of bond offer. What? That the bond offer does not entitle you equity stake in the company. Just get interest and you are not eligible for any equity stake. You won't enjoy the ownership. So people who are not worried about ownership, they just want benefit, they will opt for bond offer. But those who are willing for ownership, they will still go for share, even though it's less attractive than bond. Cash offer is the least likely method. They will only be opted by those people who are in need of cash, else bond offer or share for share is better. However, one thing should be noted, there are many shareholders. One shareholder doesn't have all shares. There are many shareholders. So it is highly unlikely that every shareholder will move towards the same thing. People will move towards different. Someone who are in need of cash may take cash, others may take shares, and others may take bonds. Those who want ownership will definitely offer share for share. Now, that's quite a strong discussion. That's it. Okay. But let's see. Were we right? This is the answer paper from this question. And just have a look at this. Your requirement was of 16 marks, right? C. Calculation of SIGRA P ratio 2 marks, Dentro PE share value 2 marks, then 1 mark for percentage gain under cash offer, total value of combined company 1 mark, then per share value of the combined company 1 mark, share for share, bond return 2 marks, value of bond per share 2 marks. Look at the comments. Hardly 3 to 4 marks. Hardly 3 to 4 marks. Now, what students want, they want their pages to be filled, because once they see comments on the answers obtained, okay, I have to fill at least a page. That what wastes your time. That's what loses you, incurs you loss. So the best thing is that always read marking scheme. There is marking scheme present at the end of every exam. Read the marking scheme. You will get a very, very good idea of how things work, how much you have to write. That's a very, very big question on the tongues of every student. How much should I write? So once you read the marking scheme, you will be able to clearly get an idea about that. Okay. Any questions with this, please? Discount factor is KD, cost of debt, which is same as interest payment. That's why I took 6%. Completely your choice, because if you look at the exam software, let me just show you. The response options are spreadsheet and Word both. So it's completely your choice. Which one do you want to use? You want to answer discussion on Word, your choice. You want to answer it on Excel, it's your choice. But people were very much afraid from Excel, and now I think those people who are giving paper-based exams, they are more jealous that Excel is saving a lot of time and they have to give it on paper. So from I think March or June, they plan to make it completely computer based. But this is not something to be afraid of. This is a thing of great benefit for students. Yes, Meena, you can give the comments in Word file or in Excel file, both are allowed. Yes, people do this. They solve the calculation on Excel and do the theoretical part on Word. Both are allowed. Okay, Wajahat. So acquiring company will pursue different stream for all this. Yes. Basically, what the scenario is that the acquiring company basically wants to acquire the company, and they know it's a difficult task to get 51% holding. They know it's a difficult task to convince 51% shareholders to sell their shares. Therefore, they pursue different strategies. They see that someone who is interested or maybe wants to exit, they offer him cash. Okay, those who are strict about equity ownership, they offer them shares, so they pursue. Shalima, whatever colors you want, you can use. You can even use purple, you can even use blue, you can use black, red, it's your choice. So I think we have covered our stuff. Now I will just give you some final advices, and then we will finish it off. And one more thing, as I told you in the first class, these were practice to pass sessions. Okay, there is absolutely no way one can expect that in 15 hours, 3 hours, 5 sessions, you can cover whole before syllabus. So we basically covered those areas which was according to my reading, because I have been teaching this paper for the last 7 years. Okay, so as per my reading and analysis, what topics are there is high probability or chance of getting examined, I selected those topics and selected those questions. Okay, now obviously there are many things which were not possible to cover in this. Okay, so that's why we have made WhatsApp group, and that's why I've provided you my number as well. If you have problems in any topic, you can just privately drop a message and we will try to find out a solution. Maybe a person is able or he's facing some problems in a particular question, and maybe possible that from a regular course I have a video of that lecture, so maybe I will be happy to share with him. But if it's available, definitely. So that's why we have shared the numbers, and we can always remain in contact. Now, there is a very, very strong requirement that please tell us the list of important topics. Now, in my dictionary, there is nothing like important topics. Everything is important. Okay, in my opinion. Okay. However, you can say that I have complete paper, because it's a very dangerous thing to tell important practice questions or important topics, because the tendency of students is that they just do those topics and then they say, okay, you told, that's why we did it. No, you have to cover the whole syllabus. But Meena Jain, I think for how to use this Excel functions, you can just go to YouTube and search for videos, or you can just check the sample answers of ACCA. You will be getting great help. Okay, coming back to the topic. So you can say that I have done the complete preparation. Now I need some questions like this, which refresh the whole syllabus, and what topics you consider are important, you can let them. So with a disclaimer, I will be sharing on that WhatsApp group few questions which cover the whole syllabus. Okay, and I will be telling you some important questions as well. Okay, you can do that, but it's with a disclaimer. You should only do that once your whole preparation is complete. Okay, we will be staying in touch on that WhatsApp group. It's a very healthy group, around 250 plus people, and whenever students answer questions, even before I answer them, there are many students who have grip on that topic and the answer. It's a very good thing, and I really like seeing that people are willing to help each other in that. So we will be staying in touch through that WhatsApp group till the exam, and through importance and other stuff, or there is some emergency requirement of any video and stuff. So we'll stay in touch. However, now it's just last 3 minutes to go in this, and this is our last class. So it's a personal request to all of you. Please send me feedback on the where you are sending questions. How did you find these webinars, and do you think that the techniques and tips help you to improve your confidence? Okay, I will be waiting for these. Thank you. because when before leaving you just give a feedback, this helps us to improve the performance for the future. Okay, thank you for the wonderful feedback, students, and hopefully we'll stay in touch through that WhatsApp group.